Tell me if you think that the impact that NVIDIA has on the broader markets makes good sense.
Yeah, good morning, Contessa. Look, it does in some respects. If it were just talking about NVIDIA, the stock, it wouldn't make much sense at all. But that's not really the story here. The story with NVIDIA isn't really just NVDA, the ticker, and what it's doing on any particular day. The story with NVIDIA is more about like how much of the economy is adopting AI, how much of the economy is CapEx spending on these things. And what we saw out of their earnings report was actually really, really good on that front. What we saw is a broadening out of the types of companies, CapEx spending on AI. And if you're going to get the productivity enhancement boom that we think you're going to get out of this revolution, then you need a broad swath of the economy investing in CapEx and AI, actually implementing it and figuring out how to use it to generate those productivity booms.
It's interesting because you're pointing out that revenue per worker is the metric to look at, that when we're looking at adoption of AI, revenue per worker is what has the potential to move the economy forward. Explain that thesis.
Yeah, look, productivity productivity itself is really tough to measure to start with. So let's just start there and admit that productivity is hard to measure. But one way you can measure it is revenue per worker. I mean, that is kind of what the definition of it is. And the last time we saw a big uptick in productivity per worker in the S&P 500 names was really back in the mid 90s, and that obviously coincided with the internet and VC revolutions. We've been stagnant for the most part for 20 years on that metric. And if you get a big uptick, we've started seeing an uptick these last couple of years in that metric. If you start seeing an uptick in that type of measure, man, look out above in terms of the stock market. That kind of productivity that we have not seen for 20 years would be really, really welcome.
It looks like the losses for shares are retreating just a bit for NVIDIA, now down about 3.5% in the pre-market. What do you like for equities moving forward? What sectors do you like, and which are you staying away from?
I mean, we still like tech. It's just not a story you can get away from. You might have some of these short-term wobbles, but the tailwind for AI is just like the tailwind for internet PC 25 years ago. You have to be in front of that story. So that's one. If you get outside of tech, we do like sectors like energy still, and we think it's got some geopolitical hedge characteristics that are helpful, and we think it's a cyclical that's going to win. And we also like home builders. We are obviously on the verge of a rate cut cycle. Home builders are the first, the prime mover, the first mover when you get lower rates. So we think that's actually a place to be. In terms of things to avoid, it's really just anything having to do with China. China's in the throes of a balance sheet recession, and so think like metals and mining, think kind of raw commodity plays, think like deep cyclical kinds of plays, things that need a really strong growth surge in order to win. Anything having to do with that, we tend to avoid. We like the market overall, but those are the things that we favor.